Londra'da Hantec Markets piyasa analisti Richard Perry bizimle birlikte. Hi, Mr. Perry.
Hi.
Well, thanks for joining us. I want to start with one of my audience's question. You know, we're following the balance sheets nowadays in the U.S. and there is this risk appetite in the markets according to the balance sheets. But my audience is asking that after this period of time, are we going to see a kind of sell-off? What is your take on that?
Well, I think at the moment what we've got is we've moved into earnings season, and earnings season is now taking over as the sort of main driver of markets. Because previously what we've had in the last few weeks is a lot of risk on, risk off, following on from the news flow, which had been positive and negative and then positive and negative. And what we're now seeing is that sort of calming down, and we can turn a little bit more back to the fundamentals. So the earnings season has started positively and certainly has seemingly been supportive of equities going high. You've had the banks which have come out strongly. Earnings from Netflix and Johnson & Johnson have also been better than expected. So we've seen some positive trends coming through earnings season at the moment, and that has helped to drive the market higher in the last few days. And we've actually seen some technical breakouts to the upside. 2,675 was a key level that on the S&P 500 was broken, and that actually now implies that we're now starting to gain traction in a recovery. And that recovery is also being reflected across the European markets as well. We've seen the DAX breaking back above its February highs of 12,600, and also the French CAC index as well. So we are seeing some traction in the recoveries of these stock markets now. Now they can continue to recover with earnings season if it remains on a positive scale, because I think at the moment, as I said, it's begun on the right foot, but it needs to maintain that momentum. Also, we need to sort of continue to see that the news flow sort of driven trading doesn't come back. Say, for example, the trade disputes with the US and China, and also the whole issue surrounding Syria as well, and the geopolitical side of that. But as long as we can focus on the improvement in the earnings and the strength of the growth that we're seeing in the US, I think that there is some continued upside to be seen.
Well, Richard, as you mentioned, it's not all about the earnings season. We also have some risks on the political and geopolitical side, especially the wars, the commerce wars that you mentioned are quite important nowadays. So what is your take on that? I mean, in the near future, what kind of risks can this give us? Can this give to the equity markets? And what are your scenarios? I mean, I want to ask your worst case scenario first of all, because this is a huge risk that we cannot price it at the moment, isn't it?
Well, I think there's a danger of the market sort of taking Donald Trump, for example, too much at his word, because he does like to sort of flit positively and negatively on Twitter. He sort of comes out with very expansive comments that have a tendency to flip market sentiment one way and then the other. And I think if you sort of take a step back from that and actually look more about the actions that the US are taking rather than the sort of rhetoric that's coming out of Donald Trump at the moment surrounding the trade dispute, I think there's more likelihood that there's going to be a sort of compromise coming down the line between the US and China, which is going to avert a trade war ultimately. And I think that would mean that you might get some volatility still in the market, and as I said earlier, that if the news flow trading comes back into the market, you're likely to have an increase in volatility on the back of that, because at the moment, in the last few days, what we have seen is volatility falling away. The VIX, for example, back around 15, having been above 20 and previously. So I think that at the moment we're relatively calm, and as long as that the rhetoric doesn't again ramp up from the US and China, then I think we can see that we're going to be sort of moving towards more of a compromise on this trade dispute, and that should help to sort of assuage any worries that investors have.
Well, dear Richard, for the last word, I want to have your take on the dollar, because nowadays we're seeing a kind of weakness on the dollar side against developed market currencies like the euro, sterling, and etc. But on the other hand, the dollar is quite powerful against the developing markets like Turkish lira and some other ones, the ruble and the others. So what is your take on the dollar side? Especially here, we need to, again, think about what Mr. Trump is thinking on the American economy, isn't it?
Yes, it's correct. And certainly in the last few months, what we have seen is very much of a choppy outlook on the dollar, certainly against the developed G10 currencies. It's sort of moving in a sideways range. We've got euro-dollar moving sideways. We've got dollar-yen moving sideways. An interesting outperformance on sterling, but that's due to domestic issues surrounding Brexit and also the move towards a rate hike by the Bank of England. But the dollar generally has I think on a near to medium term developed into a range play, but I think on a longer term basis, you look at the factors of the twin deficits that look to be deteriorating. Also, you look at the yield curve that continues to flatten in the States. That's going to be dollar negative pushing out. And I think that if you look at the euro-dollar interest rate swaps going forward into 2021, now they're actually turning negative. So again, that sort of suggests the end of the tightening cycle around that time. And I think that what we're going to see is the dollar coming under pressure in the coming months as we gradually start to sort of re-engage these trends that we've seen previously of dollar weakness.
Thank you so much, Richard. Thanks for joining us.
Thank you very much.
Markets Piyasa Analisti Richard Perry.